Now, we've talked about my timing model for many years. And in the last 18 months, I've really been leaning on it so you would understand the type of research that we're doing. Now, my timing model has shown that we've been in the accumulation phase to expect much higher prices in homes, but yet it's not going to end anytime sooner, and prices are going to accelerate and get even higher. Now, the timing model often tells us what is going to happen, doesn't necessarily tell us why. So let's talk about why this is going to happen. We're getting some statistics right now. So let me go to my very first screen and let's talk about the timing model itself. Now, this timing model, as part of our research, has been very accurate. Doesn't necessarily mean it has to continue to be accurate, but it has been very accurate. It has accurately predicted when these two corrections in an ongoing bull market would start, and also correctly identified the accumulation phase. Now, the accumulation phase is just that. It's the phase where you really want to be buying some properties because prices are going to go up, and it becomes a very good market. Now, we've been in it for the last 18 months to 19 months, probably going to be enjoying it for another maybe 6 to 18 months. And then we're going to go into this explosive phase where if you think you saw prices go high in the accumulation phase, the explosive phase just goes off the chart, and we may go to a bubble. This is kind of what happened in 2006. We just kept going and got up to bubble territory to where it was unsustainable and then rolled over. Now, this has been going on for literally hundreds of years. We have data going back to pre-revolution. So this isn't guaranteed to take place, but it's been pretty accurate so far. So we're still here in the accumulation phase. We are going to go up to really about here. This is going to be about maybe 12 months from the peak. Once we get to the 12 months of the peak, we are going to want to start thinking of what we're going to sell. We're going to quit buying and start selling some things out of the portfolio and pay down debt. It would be nice to buy 20 properties. You sold 10 and paid the other 10 off, and you rolled over into the completion phase with free and clear properties that were just cash flowing. And this becomes a very long-term investment for yourself. You know, investors, as real estate investors, we really look 5 years in the future at least, but oftentimes looking 20, 25, 30 years. I own properties I've had for well over 30 years. They still cash flow, they're still growing, and I've taken through a couple of cycles, and they've just treated me very well because they give you income. Now, that's a very good thing, income. Now, why are we concerned about income, particularly as a baby boomer? Because we have inflation. Now, one of the reasons why, remember, we're not necessarily sure we get what, but we don't necessarily get why, but you can see why now, is that the government has unleashed liquidity in historic amounts. Now, when we went into the recession in 2020, you can understand where they put out $6.3 trillion. If you go back and look at my videos, we talk about the fact that we're going to see housing go much higher. And one of the reasons was that it takes 12 to 18 months for that liquidity to go through the economy and get down to Main Street. And when it's on Main Street, that's where housing is at, and you can see houses start to explode. Now, immediately in 2020, when that liquidity was unleashed, the stock market started going, because the stock market is the most liquid market in the world, and that's where a lot of the liquidity went. And now it's gone into housing, just like our timing model has explained. Let me go to my next chart, and let's look at one of the ramifications from that and what we need to do to protect ourselves. Because here's what's happened. We've been talking about inflation. So you can understand the government, when the economy went into this great shock, it was a severe recession. It was short, thank goodness, but very severe, a really far-reaching recession. They put out a lot of liquidity, $6.3 trillion, and it takes a little while. Now look at here. You can see on the chart in 2020, this is where the recession came in, it dropped, and then boom, we had $6.3 trillion, and inflation just took off. And here we are into late 2021, no sign that inflation is slowing whatsoever. And what's our government talking about doing? Well, they're talking about stimulating with $3.5 trillion, $3.5 trillion in new spending. They've already put another 1.5 trillion, and they're talking about another 5.5. So they're going to be unleashing 10 to 11 trillion dollars in liquidity into the marketplace. Now, maybe they're not going to do it all, probably going to do some. And what does that do to us as baby boomers? Well, you get inflation. And inflation, you see much higher housing prices, but you also see much higher housing rent. And you start losing purchasing power because everything starts to inflate. Wages go up, and you have seen in the last 12 to 24 months that wages have really, really skyrocketed. You know, you can see at McDonald's, $16 to $20 to come in and just work in the hamburger places, $20 to start. You know, we're not talking about minimum wages. We're talking about, 15 to 20 bucks just to go stock shelves. This is something that's just wonderful when you're just starting out, gives you great opportunities, but it causes inflation. You see prices of breads going up. Gasoline is much, much higher. Oil is over $80 a barrel. We're having energy shortages around the world. You see natural gas shock. And a lot of this has to do with this inflation. Property and products are going up. And we as baby boomers, if you don't protect your purchasing power, that $100,000 in income that you think that you have can get whittled down to 50,000, 40, 30. How would you like to be 81 years old and be broke? This can happen to you. So we need to protect you. Let me go to my next slide and we'll take a look and see what that is. Now, we just got this from Zero Hedge again, 20 city index. This is the Case-Shiller 20 city national index, and you can see home prices are going up. They're following that inflationary curve. They're also following our model. It's scary how well they're going up on our model. It's just mimicking the market really, really well. Now, everyone goes back to this bubble, and this was this was enormous exuberance. Let me tell you, bubbles are extremely rare in the economy. There are always tells beforehand. We are not seeing any of that right now. Oftentimes in a bubble, you see people who really shouldn't be buying houses, buying homes. They're borrowing money to get the down payment put together, and they're going out and buying homes. They have no thought of using them. They're just going to use them as a trading vehicle. They're going to buy it for 200, put it on the market the day after they close it for 250, and make a fast 50 grand. Well, that's one of the tells. That's FOMO, fear of missing out, that is always accompanies right before a bubble. And we also see the fact that rent stops. So as prices go up, the rents stop. So it becomes better to rent a property than to own a property. That's one of the great tells. That's the rent to own ratio gets out of whack. Now, today we have this. This has been going up, and the delta between the two has stayed consistent really for the last 8 years here in Phoenix. It's just been the benchmark has just stayed rock solid. As prices go up, the benchmark goes up right along with it. And this has been a very, very good tell that we are in a very, very healthy market. However, prices are going up. If you're a baby boomer and you're retiring, we've been just pleading that you just get 2 properties in your portfolio. We'd really like to see you get 10, 20, or 30, but just 2 would make such an enormous difference. Can you imagine having 2 free and clear properties that you bought when you were younger? If someone else paid the mortgage off, can you just getting your Social Security and have 2 rentals, free and clear, giving you, each rental here in Phoenix, Arizona, after everybody's paid, after management, because we don't want to have to deal with tenants. We don't have to clean up. We don't have to paint. We don't want to do any of that. So we just want to be investors. After everybody gets paid, our typical rental in Phoenix is going to get between $1,200 and $1,500 net each. So if you got 2, that's $2,500 to $3,000. If you have 10 of them, That's $12,000 to $15,000 a month that you're getting in just from your rentals. And look at our property manager just send you a check. You don't have to do a doggone thing. This just gets going to. But that's inflation. So we've been talking about inflation for a long time here, and we've been talking about our timing model, telling us that prices were going up. We just didn't know why. Now we know why they're going up. So let's go to my next slide. Now, we just got this again from Zero Hedge. Look at Phoenix. This is a 1 year. We're up over 33% for 2021 in 1 year. Last year it was like 28%. I'm going to tell you the entry level properties that we deal with are doing better than this because these are averages. We've got properties that are just skyrocketing. If you don't own them, you really need to. We're here in Phoenix, Arizona. Prices are just skyrocketing because of demand. People are leaving California and coming here in droves. We have people coming from Seattle and Portland and the Silicon Valley, Southern California. They come here, they can buy a house for half or a third of what they pay, get a newer home, bigger home, better neighborhood. And of course, we as locals, it just drives the prices up. We're not used to this, and prices are going up, and there is no ending in sight. We're still seeing enormous amount of housing pressure. If you have a entry-level home, you're going to get 15 or 20 offers on that. And it's making very, very difficult for first-time home buyers because they're getting priced out of the market. And they're getting priced out of the market because there's so much cash in the marketplace, enormous amounts of cash. This is another tell that we're nowhere near a bubble because you're starting to see cash, not starting to see, we've been seeing cash for a long, long time. We have pension funds and REITs, many REITs coming in, and they're buying these starter homes because they get yield and they protect themselves for inflation, and they're very good values. That is not a tell of a bubble by any means. That's telling you that you are in a very highly valued marketplace that everybody wants. This is where you need to be. Now, this is September 2021. I'm pleading with you to at least talk to your financial advisor and talk to them about putting a couple pieces of real estate rentals in your portfolio. I'd like to see you have 10, but just a couple of them are going to make such a difference. Going to protect your purchasing value. You saw the inflation that's going on. So we're seeing rents go up. They went up 22% last year. So if you start at our benchmark, they went up 22%. So once you get on a train, the train is moving. Once you're on, you let the train keeps going and you're on it. It's hard getting on that train, and we're asking you, please, please do this. We're very, very good at it. Talk to your financial advisor. I'm not telling you to sell all your stocks and bonds. I'm just saying you should talk to your financial advisor and see if this is good for you. Just have a portion of your portfolio in rentals. Let me go to my next slide. Now, I'm here at West USA. We do a really, really good job. Now, West USA is our back office. They did $5.4 billion last year. They really know what they're doing. They can process these exceptionally well. They're brokers. We keep everybody safe. And we're really good at what we do. We know a good property when we see one. We've got property managers. We want to acquire these properties for you. This is our business. We're really, really good at this. We're here to represent you to make sure that you get a property that's going to cash flow. It's right in the path of growth. It's going to get capital gains on it, and that rent's going to keep growing for you. And if you can put some financing on it, you're going to get a tenant that's going to be long-term, that's going to pay your mortgage off. How cool is this? Now, if you go back and listen to my videos, you're going to talk about one of my friends and a client that was 81 years old and literally broke. This doesn't need to happen. We are all going to live a lot longer than we think. You need to have an investment in your portfolio that is going to perform for you for decades. And residential rentals in the great marketplaces of the United States, Florida, Texas, and Arizona is a very, very good vehicle. Now, you're welcome to talk to your financial advisor. He's welcome to call us. We deal with this on a daily basis. You can reach me at Michael at michaeldouville.com. We're more than happy to work with you. We'll find properties for you. And of course, they're yours. They belong to you. We can put them in a portfolio. We'll manage them for you, but they're yours. You make all the decisions on them. It's not like you have to call someone and ask if what you can do. This is yours. Let me go to my next screen. Now, this is where I get to thank you for watching my videos. If you like them, give me a big thumbs up. Please subscribe. This is great for our marketing. I've been talking to a lot of you about real estate investing. I'm an author. If you'd like to support some of our my books, was Real Estate Investing for Beginners was just published. It's really going to take you by the hand and explain a lot of things and really motivate you to start purchasing some rental properties and start building a portfolio. Now, how to create a real estate money machine and retire with income. That's basically my business plan. And I've been semi-retired for 30 years. I've had a pretty doggone good life. You can do this too. This is not for me to brag for you. This is to try and motivate you to do this. Now, I think the market's going to continue like this still probably another 24 or 36 months. This is a very, very good time for you to make a lot of money. You know, we could have a correction. We could have a decline when we have a completion. Maybe it goes down 30%, but 30% from where? We could have houses that go significantly higher from here. So maybe they go up a lot more than what you think, and then they come down a little bit. That's okay. This is a long-term investment for you. We just never want to jeopardize the asset. We want to make sure we always have cash flow. If we've got a tenant and they're paying your mortgage off and sending you cash flow, how cool is that? Why wouldn't you want to do this? Now, we have seminars, we do consulting. If you're in a real estate business, I'm going to say half my clients are real estate agents. We're more than happy to help you in any way we possibly can. You can reach me at michael@michaeldouville.com. My very, very best to you. Bye-bye.